Bring you the simplest and most valuable lesson ever taught free. Free lesson, yes. So, this lesson, once I open it up and you have accessed it, you are going to calculate the value of the lesson. Remember, I say it's the most valuable lesson ever taught, yet very simple. So I'm going to show you for free. But the moment you access this lesson, you are going to owe me the value. So what's the value? The value is 20 multiplied by 20 multiplied by 12 multiplied by 20. That's 20 times 20 times 12 times 20. So if you are good with math, do that multiplication and then get the value. That is the value of this very lesson. That's why I say it's the simplest and most valuable lesson ever taught. So the value is what you are going to owe me immediately after you access this lesson, or you will access this lesson for free. Now, for you to translate this value into monetary terms, 20 is equivalent to $20 per day for the next 20 years. That is 20 by 20 by 12 by 20. So you will be owing me $20 per day for the next 20 years. So, how are you going to pay up? This is it. I'm going to show you from this same simple and most valuable lesson how to effectively, successfully achieve earning a double of the value, okay, of this lesson. That's to say, since you are going to pay me $20 per day, meanwhile, take note that you owe me a great deal on this lesson. So get ready. Okay, so very soon we are going to see what to do with this lesson. But right now, I want you to just look around and tell me if you get any clue to what this lesson is going to be talking about. So if you cannot get any clue, then just know that this is going to be an eye-opener. This lesson is going to change your perception and you're going to find out for yourself. So about learning the simplest and most valuable lesson ever taught. In fact, I'm saying this because I hope this lesson, once given to you, you will also rate it. So you will tell me how simple it was and how valuable it was. So this is not just me talking. This is you going to experience it yourself. And again, I say you are going to learn it free. So why am I giving it free? First, because you can't pay it until you have discovered it, okay? And you can't owe me until you have learned it. So I have to teach you, then you will now owe me once you discover the value. So again, the value of this lesson is 20 by 20 by 12 by 20, which translates to $20 per day for the next 20 years. So you are going to be owing me this value of this lesson. You'll be owing me $20 per day for the next 20 years once you learn this lesson. So now, why should you learn this lesson? I said, I'm going to teach you in this lesson how you can effectively and successfully achieve earning a double of the value of this very lesson every day. So you are going to effectively and successfully learn from this lesson how to successfully achieve earning $20 by 2 daily. So you're going to earn $20 multiplied by 2 daily for the next 20 years. So when you learn how to achieve this, you are going to pay me half what you are going to learn or earn. Okay, so I'm teaching you for free, so you learn from me first, then you owe me. In order to be able to pay me, it means you must apply the lesson. You must apply the lesson and take advantage of the income opportunity from the lesson. You will not find a replica of this lesson anywhere online, anywhere on the internet. So if you know what is good for you, I want you to get glued to your screen right now and pay attention to this lesson, okay? Follow this lesson till the end.
So let's go in again and see.
Now, for our simplest and most valuable lesson ever taught, I remain your coach, Francis Bestman, and I am the project coordinator of Primex Funded, as well as the program specialist of Primex Funded Mission 20.1 cohorts. So now, because this lesson is practical, I will be demonstrating all that is required for you to apply it so that you achieve the results I have mentioned already, which is earning a double of $20 per day. That's to say, every day, if you apply what you learn in this lesson, you are going to earn a double of $20. This is not me trying to be exaggerating here. Okay? Then how are you going to earn it? It is very simple. So I'm going to show you practically what you are going to do to earn a double of $20 per day. So check out the value of $20 per day if you can achieve this with this lesson. Again, I said this is very simple to learn and apply. So this is a secret that no one has ever taught on the internet. No one has ever shown another on the internet, and I'm going to be teaching it free in this lesson. So it is worth noting that because I'm giving it free does not mean it does not have value. And in fact, I said it is the most valuable lesson ever taught free. And for me giving it first, you consuming my lesson, you are going to be owing me after consuming this lesson. Okay, after digesting the information of this lesson, you are going to owe me what? $20 per day for the next 20 years, and I mean it. So for you to pay me, you're going to have to follow the very instruction given in this lesson. And the instruction is simple. So before we proceed, I want you to go to primexfunded.com, primexfunded.com, spelled as you hear, prime, X as letter X, funded, one word, primexfunded.com. So on primexfunded.com, I want you to scroll down and click learn more about Mission 20.1. Okay? Then when you learn more about Mission 20.1, I want you to click from there, the button you find under that page. Read the details and then add to cart. Okay? That's Mission 20.1. You are going to add to cart the product there. That means you are going to get access to the paid members only community for using the information you will learn in this lesson. So it's going to cost you $159 only for the first month. Then afterwards, it's going to cost you $59 every month. Now, why are you going to pay this? Because that is how you will apply what you will learn in this lesson. So if you don't follow this instruction, you are not going to achieve this result. So the instruction is very simple. Go to primexfunded.com, scroll down, click on learn more about Mission 20.1. On the next page that opens up, click the button you find down there to take you to Mission 20.1 paid members only community registration page. Okay? Now, it costs $159 in the Naira equivalent using 1685 conversion rates of Naira to dollar. Okay? You pay that to access the paid members only community. That is where you will apply the lesson taught. So if you don't follow this step, you are not going to achieve this result. The instruction is very simple. Once you have accessed the paid members only community of Primex Funded Mission 20.1, then you are going to perform daily task. Daily task has a goal of $20, but because of my lesson, you are going to target achieving double of $20 per day. So I'm going to show you clearly in the lesson how you will achieve it. So yours now is to apply what you will learn. So follow the instructions so that you don't miss out on the result. This lesson should not be taken for granted. Whatever you learn now should not be taken for granted. So to access this, go to primexfunded.com, okay, and then click on the learn more button about Mission 20.1, go to the next page, and on the next page, click the button you find there to go to the paid members only community payment page, where you will pay $159 in Naira value, okay, using the exchange rate of 1685 Naira to dollar. Once you pay that, you will access the members only community. Now we are going to fund your account for you because you have already paid for the first month, $159. So we'll fund your account for you, $100. Okay, that is subtracted from the payment you made already. Once the account is funded, we'll send you the login details so that you will monitor the actions on the account. And then we'll guide you step by step on how to interpret what I'll show you in this lesson. So now from there, the focus will be to earn what? Multiple or double of $20 per day, so that once you earn it per day, you know you are going to send me my own cut, which is what? $20 per day. So you target earning double of $20 per day, so that as you pay me $20 per day, you also keep what? $20 per day. And this will be our bond commitment for the next 20 years. So if you can follow suit for the next 20 years, why not calculate and see the prospect of this lesson? For the next 20 years, you are effectively earning $20 per day. Okay? 20 by 20 by 12 by 20. That's the value of this lesson. You are paying the value of this lesson, and you are also keeping the value of this lesson, and you are accessing it free. So is this not something you should be very curious about and very excited about? If you are really excited about it, then I want you to go to primexfunded.com right now, okay, to secure your membership so that you don't miss out. Missing out will be doing yourself anyway. So this is what I will be basing my lesson on, the action to be taken in the paid members only community. But I'm going to show you for free. Then after you have learned it, don't forget you will be owing me. So if you cannot join the paid members only community, it means you cannot achieve the result, because it is only in the paid members only community that you will be getting the guidance, yes, direct guidance to achieve this result. Why you will learn it first, then you get the guidance, okay, to achieve the result. So I'm going to proceed now to teach you, okay, show you. Then don't forget to go to primexfunded.com, primexfunded.com. If you need my attention at any time, you can always send me a message on WhatsApp. You can see the WhatsApp right now on your screen. So save this WhatsApp, add to contacts. I am your coach, Francis Bestman. So DM me on WhatsApp, ask me any question. Consulting me is free anytime. All right, so feel free and ask me any question about the lesson after learning. So now we are ready to explain what all of these symbols you have been seeing actually means. Okay, so if you look on your screen, you will notice I am pointing at, firstly, the stool, okay? So everything I have used here to create a platform have significance. So I am pointing at, right now, the fluid, okay, in the bowl. And then I have also pointed at key icons that are very important. All of those things you saw have correspondence with what you are seeing on your screen right now, which is called the chart, okay, the market, okay, and an asset. So how do they relate, and why are they important? So looking at your screen, you might be thinking, okay, I know this is trading. I know this is a trading chart, and I can see an asset there. Okay, so maybe you are already familiar with trading, but do you know that everything you were told about trading could have been false up till now? And I'm about to open up and give you the exact, okay, information you need to know about trading that will turn the trading results you have ever achieved around. I mean, if you were at zero or below zero, you are now going to get moved from 0 to 20. So you are scaling farther than just starting with 1, 2, 3. So I'm not talking about something you are going to need to try and fail on. Okay, I'm talking about something you are going to achieve exact results from if you follow this instruction I'll be giving. Okay, so right now you are looking at the trading screen, but let's not pay attention to the screen. I'll bring back the element we had looked at before now and place it side by side on the screen so that you get to see clearly what this really is about. Okay, so let's bring in one of the elements we had before now. Okay, we'll use the most recent element we had on our screen. Okay, so now I have that on the screen and I'll be using it side by side to explain what we have been doing so far. Okay, so from this point, we are going to be looking carefully so that you don't miss the details. We're going to be looking carefully. I'll be explaining what each of the elements here represents. Each of the elements here have their significance, and you would need to understand how significant, okay, these elements are. So this is a practical session, and you need to observe everything I'm bringing on screen, and then you need to, okay, see how you will finally relate. So let's go. Okay, so right now I have on my screen, so I have on my screen one of the elements. When I say element, I mean what I use for demonstration. So I have on my screen, if you look down, you see the chart. Then the chart here is what we were looking at before. So, but now on the screen, we now have the initial elements, which are the stool, the bowl, a pool, and some objects in the pool, okay? So I'm turning the bowl around. This action represents something very important. So let me begin to specify what each represents. So now the bowl represents the market. The bowl is the market, okay? And this market is a global market. These two and its four legs represent traders from the four poles, okay, of the globe, which means north, south, east, and west. This means global traders, okay, who are interested in the market. Now, we now have inside of the market the pool, okay? So I said the bowl represents the market. You see the bowl is a round object. Now, it represents the market as a global sphere. Now, in the bowl rather, which is in the market, we have a pool. The pool represents the state of the market. The state of the market. The state of the market is fluid. So, which means the market is never still. Is in a state of constant flux, just like a flowing body of water is in a state of constant flux. Now, inside of this pool, we now see the key elements, which I'm holding on to one. One of these elements represents the people known as market makers. Market makers. So, market makers are those who come into the market after a time of rest and then define the asset overall direction. In other words, they define the asset reported state. Okay? They will define that state by resetting the scale or rebalancing the scale. So to reset or rebalance the scale, they need to add volume to what they already have exposed in the market. Okay, so based on this information given, let's now address what do these players who we refer to as the market makers actually do.
So first of all, we have the market makers. These are those who represent the banks, okay, the hedge funds, the insurance houses, and all of the big players that are holding large amount of funds that determine the direction of an asset. Okay. So now inside the pool, I say the pool itself is the state of the market. It's always fluid, which means it can always change. There is a steady fluctuation happening. Okay. So inside of this pool, we have different assets. Now, one of the assets we are using for our demonstration, you can see here is Apple. Okay, so Apple here is not the apple you bite. So the apple you bite is a fruit. Okay, but the apple you are seeing here is not the apple that is a fruit, but the apple that is an asset traded in the market. And that apple is the one we know as one of the most valuable companies, okay, and stocks listed in the stock exchange, which is in the global stock exchange like Bloomberg. Okay, so now when we have Apple as a stock, Apple represents value. So inside of this pool, you see elements. One, we have the equal to. So the equal to tells us that this asset is always equal to a certain value at any given time. Okay, this equal to, that is one of the elements we have in the pool, represents the value of the asset. So the asset is always valued. So the value is either a higher value or a lower value from when it was listed as a tradable asset. Okay, now we have in this same pool other elements like we have the point, so decimal point. At the time the asset had its first value, it began from a decimal placed value, okay, which means a value below 1. So it could be a number of digits behind 1, but that is where the asset began from, which means there was a point when the asset didn't have the kind of value it had currently. So to say the asset would have appreciated in value over a period of time. Okay, so now the market players are those who are representing the four legs of the stool. These players have one role to play. Their role is to express interest in the asset value. Okay? Express interest in the asset value. So they want to either sell the asset or buy the asset because of its current value and its projected future value. So now there is a counterplay of interest expression from all the players who are the traders. So if you have been hearing the word traders, the traders are simply market participants with different portfolio sizes from different parts of the world, working with different financial institutions to follow the course of progress of an asset according to its value at every given time to either purchase or sell off their holding of that asset. So they are either purchasing to add to their holding or they are selling off to liquidate their holding and cash out, okay, of the market. So the market now presents an opportunity for different players to come in and assess the value of the different assets available to them at every given time. So now the value is the key thing about the asset and the uniting factor for all players. So the asset alone is not as important as its value, which means that traders have the freedom to choose between assets where they find higher potential for reward, okay, based on its current value. So the asset can always change. Now, they can always flip assets, which means they can hold one asset and sell it off and hold another asset, okay, until they feel it is ready or due to sell off. So traders who use the market and its asset as opportunity to convert liquid cash, okay, liquid cash into higher value of profit or return. We always shop for assets to buy or sell. Now, the very transaction that goes in for traders to buy an asset or sell an asset is what is known as trading. Then the different kind of traders who come into the market to buy or sell an asset can now be either the retail traders or the institutional traders. So the institutional traders are those who represent the different financial institutions that offer financial services and products that are accessible to their different customer and client base. So whatever financial product or service is offered by an institution, the institution has a role to play in contributing to that product's value in the market. So the number of customers or clients they have that hold any asset will influence that asset behavior over time. So large institutions with large client base can be acting as representatives of all their customers, okay, by purchasing an asset or selling off an asset. That is when the institution itself is participating in the market as a trading entity. Now, apart from institutions participating as trading entities representing all their clients and customers, the customers of a particular kind of institution that offers access to a margin account, okay, are known as retail traders. So a margin account now means that the customers of this institution have agreed to fund an account with their institution as a trading partner. Okay, so their account is held by their institution and they agree to control, okay, their own participation in the market while the account is now leverage for them by their institution. So that kind of account that enjoys the leverage of their institution is called what? A margin account. While those who trade margin accounts are called what? Retail traders. So these are the large number of people in their individual capacities from different parts of the world who play a retail role of buying is or selling any of the assets of interest. Now, the market where they can buy or sell these assets are different and variegated or have varieties. So there are the stocks, okay, market. There are the options market, okay. There are the indices, okay, and there are the synthetic indices. All of these different kinds of markets fall under a broad category of derivatives and futures. So they fall under a broad category of derivatives and futures. What this means is that these assets that are purchased by retail traders are not available to the traders in their raw form. They are rather purchased and sold over the counter via a terminal provided by the financial institution acting as brokers, making these assets available or accessible to their customers or clients. So now that these customers or these clients have indicated interest in participating in the market, for them to access that asset at any value, they need to first of all go to a broker who will now give them access through a trading account. That account will now have to be funded using the amount that is available to the trader at the time of beginning their trading transaction with the broker. Now that account will now be connected to the broker's own terminal, since the broker has a terminal that connects with what? The market. While the customers now have a wallet with the broker that gives them a login for their individual use, okay, to access the terminal. So one of the terminals is called the Meta Quotes, okay, or we have so many other terminals that are created. So, but Meta Quote is very popular, which is what provides the trading platform known as MetaTrader 4 or MetaTrader 5 platform, depending on which type of account the customers have agreed to open with their brokers. Okay, so now the broker has done its part to make available the assets. To give these customers or clients this asset, the broker needs to fix a value which is called a spread on the price. So there is a kind of addition of the price, okay, from the margin the broker wants to make per transaction initiated with their clients who are now contract. So as partners, the broker now gives a price which is quoted on the charting software. So the trader can see those prices quoted. Okay, using MetaTrader 4 or MetaTrader 5, there is a screen available to check all the assets listed by the broker or available, okay, in the market. So this screen is called the quote screen. It represents a list of assets that the broker has made available for the trader. So the trader will now go through the screen and screen out, okay, any of the assets that they are not interested in trading. Like I said, there are a variety of assets. So the trader will now choose, okay, which asset to trade. But whatever they do, they are only acting over the counter, so behind the screen, okay? They are not acting in the market as direct players or participants, but their accounts, okay, and the transactions in it reflect under the brokers or financial institutions terminal. So the financial institution now has access to where these assets are valued, okay? So the valuation of this asset is called swap. So as these assets are valued, the broker is paying a certain amount to keep them having a unit of this amount of asset for their clients to trade. So because the broker is brokering, you can see now, so the broker is representing the market for the trader, they have to get their own cut from every transaction. So anytime the trader intends to buy or sell, they must first of all request, okay, that entry through what is called a contract for difference. That contract for difference means that the trader will state what he wants on a trading order form. Okay, so this order form is a software dialog box where you fill in all the details you want to specify as why you want to take this entry, the value at which you want to take this entry, and when you intend to exit this entry, this position, okay, or this holding of this asset. So once placed, the contract has been sealed unless cancelled by the trader. So the trader can only cancel when the contract has not been active. But the broker can also cancel when the trader does not have sufficient account balance to handle that transaction. So the broker now is monitoring without directly interfering, okay, since it's a contract. So once the trade is executed for the trader at the set parameters that are not altered by the broker automatically charges its spread, okay, which is the difference between the market's own given value for that asset and the broker's own margin on that asset for every unit of it that is purchased by the trader. So the lower the amount of the lower the amount of the asset purchased per time, the lower the amount paid to the broker. Okay, it is already added to the price of the asset. So the broker always participates in the trade, just like the trader participates. So now that this basic information has been given out, what is next? going back to the value of the assets we are talking about, which is what connects all players in the market. So now the first thing to look at is how prices of assets fluctuate and what is the constant. So there is a constant, something that does not change when everything else is changing. Okay, that is a constant. In the fluctuation or the flux of price in the market, that's price of any asset in the market, there are constants. And this is what explains why price of an asset will behave in a certain predictable pattern that can be studied. So if one can understand the pattern, one can effectively predict the behavior of price for the future time and take advantage of that prediction to make gain. And this is one thing that makes trading very appealing to those who have the funds for it. Okay, so how is this applied? So, firstly, price moves in sequence, not in series. Very key points to note. Price moves in sequence, not in series. The movement of price in sequence implies that when price takes off from any point, okay, that point is equal to a fixed amount, which means that that price must have been at a fixed price, okay, before it changed at the time of observation. Now, from the point when it changes during observation, there are a number of points, okay, where it can appreciate or depreciate to. Now, how does that appreciation happen or the depreciation happen? Because this is the value of the asset now, either appreciating or depreciating, but recorded in the price, okay, or the rates. So now, how does it appreciate? Now, if price is changing, it is easy to expect that it will count 1, 2, 3, 4, 5, 6, 7. So it will keep changing 1, 2, 3, 4, 5, 6, 7. But that is not the constants. Okay, the constants are key points, okay, or core points that price appreciation targets. Okay, so price targets core points. Now, every other point in between those points are value with less significance. Okay, value with less significance, which means if one wants to predict price, one will need to pay more attention to the key points and not the what less significant points. Okay, so one we need to avoid all of the noises, okay, or the noise seen in those other points and focus on only the key points. So which means that one we have to structure their price change to focus on movement from one key point to another key point. So how are these key points determined? From the example demonstrated, we notice that in the fluid, okay, as we shake the fluid, the shaking effect means traders pulling the assets from different ends, okay, expressing interest and buying and selling and buying and selling. That is creating what is called volatility, okay, which means that the price will keep changing frequently and indiscriminately. So it is changing not regarding the individuals and identity of the traders, okay, who are expressing interest in it. It is changing in an order that because there is an unstable amount of interest from buyers and sellers, it will have to be tilting towards either side. So that is when you see the pool shaking. Okay, you see the pool as we are shaking the bowl. The pool is shaking, and every element in the pool is shaking. So, as the shake effect is noticed, okay, that pool that is not stable, what is happening? What do you observe? You observe that as sometimes the asset tumbles. Okay, that is when the element we use, that is the apple that represents the asset. When it tumbles, it means that the value of the asset is dropped, and investors or traders lose confidence in the asset. So depending on the kind of market traded, if it is a stocks market, when the value of the asset tumbles, you will see that traders will start selling off their holding. Okay, why if it's in the forex market, when the value of the asset tumbles, traders will start placing a sell order. Okay, so whenever it tumbles, it is what? A representation of what? Price losing or asset losing value, which means that the price is going to a lower level. Okay, now when we shake the pool again, which means that traders are still competing for holdings. These holdings in the market, we refer to them as positions or entries. So traders are still competing for good holdings, good portion of the asset to hold per time. So they are bringing in funds. This fund brought in is what is known as liquidity. Okay, it is what influences what? Volatility. So you see the relation of the key terms in the market: liquidity and volatility. So liquidity is the amount of money each trader in their global scale, okay, brings in to the market to purchase or sell off a certain amount of the assets in their holding. Okay, so they are either adding assets to their holding, so using money to buy assets, okay, or they are selling assets, which means taking out money from their holding. So this is called liquidity. Now, as they keep doing this, the value of the asset continues to turn around. Okay, it's either going to the higher price or the lower price when those who want to add asset to their holding exceed the number of those who want to take out money from their holding. Okay, the asset will now rise and gain value. Okay, why? When those who want to take out money from their holding, which means they are selling off their positions, are more than those who want to what? Add to their holding, the value of the asset will what? Depreciate. That is when we see price is what? Reducing, or we see the market is sinking. So when we use the icon, which is the apple, apple represents a stock in the market, a value. Then look at the color. The color of this element here is gold. It also represents what? Gold as an asset, a key asset in what? The forex market. So we are now doing comparison between the forex market and the stocks market. So the traders in these areas participate because these assets have high value. So in the forex market, gold has high value. Why? Just like the color of gold is also used to represent what? The Bitcoin in the cryptocurrency market. You see, they have the same color. Okay, so in the crypto market, the Bitcoin has the highest value. So traders always look at those assets with higher value. They find them more interesting to either increase their holding with belief that the value will keep increasing, or sell off their holding to start taking out portion of their profits on that holding. Okay, so every time this action of buy and sell is going on, there is what? Volatility. That the market is in a state of flux. Price is always changing. As price is changing, something valuable is happening. That is the market moving from point to point, which is what this lesson is based upon. How to determine another level where price needs to get to for it to move in a certain direction that is very predictable, and with good or accurate prediction can result in making good income, okay, or profit from it. That is what this lesson is based upon. So now, price now will be moving between those decimal placed points that are not significant, so the insignificant points, okay, as it is changing between buyers and sellers. Once it finishes that, noise, distraction caused by the market players coming in and jumping out, coming in and jumping out, then the market makers, those who understand how price should move, will now come in with a projection and take a position in that direction. Okay, so they'll come in with a projection. So their projection is they want this price to rise by so number of points fixed in their minds. Then they will come in with the amount of funds that will enable it to move in that direction. That is the tool I use to shake the pool, okay, and to arrange the elements in it. That is exactly what the market makers do. They are the ones that make the price to move to the key points, while the noise in the market is caused by the retail traders who are gambling with the opportunity to either hold or sell off. Okay, so now the focus should be on where the key points are and when they could be the next point of interest for the market makers to target. That should be the focus. Okay. So, how are these key points analyzed? How can we forecast them? How can we base our entries on them? I'm going to give you in this lesson, like I promised, the formula, the secret to getting it right all the time. So, the first thing is observation. You want to observe where the price currently is. Notice that the current price is your starting point. At every time you come into the market, there is a starting point. Okay, there is your current price. So the very time you come into the market falls into a certain time frame. You can scale that time frame from 1 minute time frame. You just came in, this is the first minute of your coming in. So the 1 minute time frame corresponds with a certain minute in the price behavior, okay, or price change. It also corresponds with the next higher time frame from 1 minute to 5 minutes. So that time you came in fell into a 5 minutes time frame, which has a direction of how price is behaving within the time frame. Okay, that same 5 minutes of your presence is also part of what a 15 minutes higher time frame. Then the 15 minutes is also part of what a 30 minutes higher time frame. The 30 minutes is also part of what a 1 hour higher time frame. The 1 hour is also part of what a 4 hours higher time frame. The 4 hours is also part of what the 1 day higher time frame. The 1 day is also part of what the 1 week higher time frame. Then the 1 week is also part of what the 1 month higher time frame. The 1 month is also part of what the yearly time frame. Though in the structure of time frames, when you use your charting software to observe, ends at the monthly order. However, you can use all of these time frame interval to understand how key points are calculated and anticipated. Again, I said this is the core, the main reason for this lesson. How to anticipate price targeting the next key point, because the market makers will be interested in driving price to that point, which means that they are going to come in when the retail traders have stopped making noise. Okay, so while the market is shaking, the real presence of the market makers is not felt. Okay, they are only there to observe. So your own job is to observe like a market maker. That is why the first action of a good trader is observation. And when we say observation, we say start from where you are, the current price. Okay, just like a market maker has been observing till when you came in. So they are still observing even where price currently is. They are looking for what? A takeoff point where they will come in. You want to be there with them when they are coming in. Okay, so now that you know this, what's the next thing when you have identified the key points for your entry? Okay, so it begins with understanding the order of price change. Like I said, market does not move in series, it moves in sequence. What is the difference between series and sequence? So for series, there are what? A number of units, okay? That's a unit of price change or number count. So it's either numbers or price, okay? So the numbers are used to represent price. So there is an order of change taking place, which can be 1, 2, 3, 4, 5, 6, 7. This is called a series in a what? In a in an order, okay, of arithmetics. When you are counting 1, you start from 1, you count 2, from 2 you count 3, from 3 you count 4. That's an order of arithmetics. It's a series, a gradual progression of number change using 1 as the differential between every unit of change taking place. Okay, that is 1, 2, 3, 4. So if you look at the difference between 1 and 2 is 1, difference between 2 and 3 is 1, difference between 3 and 4 is 1, difference between 4 and 5 is 1. So which means that it is graduating in a fixed order of change in points by 1. Okay, that is called arithmetic progression, which means that we are rising or scaling by 1 to get to the next point. All right. So now that is a serial counting, a serial order, okay, of price numeration, okay, or counting in arithmetic order. Now, apart from the arithmetic order of series, we also have what? A geometric order or geometric progression. What does geometry mean? Geometry always look at double sizing, okay, multiple sizing. So when you look at any geometrical shape, you see multiple sizes. You can either see a flat surface with 4 sides, okay? You can see what? An angle, okay, with what? 3 sides. You can see what? A square also with 4 sides. You can just look at different geometrical objects with different shapes, all right? So now, in geometric order of serial counting, we have geometric progression, which is counting with elevation. So we count from 1, we scale to 3, we scale to, after 3, we scale to 6, after 6, we scale to what? 12. That geometric progression. Or we start from 2, we scale to 4, after 4, we scale to what? 8. Okay, or we just want to use 2 in the interval. So we have 1, 3, 5, 7. Okay, or we do 2, 4, 6, 8. All of these are geometric progression. Now, this progression, because there is a fixed order in between of a number of points between 1 and 9, all right, they fall under serial counting. They are easy to project, okay, easy to calculate, easy to anticipate. And I say price does not move what? In a serial order. Rather, price moves in a sequence. So, what is the sequence of price move? I said this is a secret you can't find from any other lesson. And that is why you owe me for this very lesson. Okay? So, what is the sequence? Now, in the sequence, there is only 2 digits that represent price change. And these digits go with the mathematical and logical constants of a binary order of 1 and 0. Okay? So, both scientific, computerized, digital, okay, mathematical and logical order, okay, we have what? Use of binary figures, which is 1 and 0 in a repeated pattern. So how can you know the pattern? That is what differentiates you from the rest of traders all over the world. How can you know the pattern? Because in a binary sequence, you can have a different altered form. You can have 0, 1, 1, 0, 1, 1, 0, 0, 0, 1, 1, 1, 1, 0, all like that, all replicating 1 and 0 only. So you see, this does not go with the regular order of counting 1, 2, 3, 4, 1, 2, 5, or 1, 2, 3, okay, or 2, 5, or 2, any order of series. It doesn't go with the series order. It goes with the same order that is used in programming, mathematical, and computer language. That is a digital order. All right. How can you, as a human being, not a computer, anticipate this? This is what I am bringing to you, and I want to teach you. Okay. So, over years of observation, because I told you that the starting point is observation, this has been observed that price does not move in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 order, which is a serial order. Price moves for key points which can be predicted and which are the point of interest of the market players or market makers. Okay, it moves in key points that are sequential. Now I'm going to give you how to calculate that sequence. So, yes, I say use your binary digits, which is 0, 1, 1, 0, 0, 0, 1, in that order, okay? But know how to apply it, which is what I'm going to show you. Okay, so I'm very close to the high point of this lesson. Okay, I'm very close to the main focus of this lesson. So why I would delay giving you that immediately, I will remind you once again to go to primexfunded.com and secure your membership. okay? So that when I give you the secret, you will apply it and make money with it, okay? So how do you make money with it? I'm going to explain how to make money with it. So when you have learned this secret of counting price in a sequence, you will have to now try it yourself by having your trading account, okay? You can practice with it. So in Primex Funded Community, we have what we do called a trading challenge, okay, or a trading contest. So you have to fund a trading account with our recommended broker. So if you are part of our community, you need to work with our recommended broker. So I will not be mentioning the name of the broker until you are in the community, so that you have to work with our own regulated broker. Fine. So when you do so, you have your account funded with a minimum of $50 to participate in our contest. If you are going to participate in our contest, this lesson will help you to win. Okay, so if you really want to win our prizes, we give prizes of $30, $50, $100, and $200 monthly. So it's a steady thing we do. All you need to win these prizes is to have your account funded with $50, and then with $50, when you participate in our trade, if you make more profit, you are going to be giving the reward. So we are giving reward to those who make more profit. So we are rewarding those who have, okay, not those who have not. So we are encouraging you to learn to have an abundant mindset, learn to pursue multiplicity, duplicity. Okay, so learn to grow. That is what we are teaching you, growing your income. And this very lesson will help you achieve that. So remove all of the biases you had about trading. Trading is a very important thing that if you understand, you can change your life with it. It may not happen overnight, but it will surely happen. You don't need a miracle, you don't need a prophecy to make you understand that trading actually works. You only need the right knowledge, the right tool, and be positioned at the right time. That is why I'm making this lesson, to show you how to achieve this result. Now, if you follow this lesson, like I said, I'm going to give you the exact pattern for calculating the sequence of price, so that you can be like the market maker. You can be there before the market maker. You can anticipate the movement of the market maker, and you go in with the market makers. You make your money, and you come out when they are coming out. That is what this lesson is based on. And like I reminded you, the objects I use to represent what happens in the market are very, very accurate. Okay, so now let me go back to the pool. In the pool, we find other elements. Okay, so I've mentioned the Apple element, which I said represent the stocks, okay, or any of the assets. So let's look at Apple. In the spelling of Apple, we have the letter A. Is that not so? So A represents a number of different valuable stocks. Let's mention different valuable stocks that start with A. Amazon, one of the most valuable companies in the world. Okay, so the founder of Amazon, Jeff Bezos, has been the world's richest man, as you know it. Is that not so? Very good. And he was the world's richest man for a long time, when he was at $100 billion and nobody had got to before him. All right. Now, we also have another company and another asset that starts with what? A. Alphabet. Okay. Alphabet is the name of the stock of a company known as Google. Everybody uses Google for search engine and so many other web services, just like Amazon has a web service that supports so many tech projects. Okay, so you can see that the good big companies are having what? The alpha as their integer. That's the letter A, alpha, as their integer. Now, after alpha, you have beta. Is that not so? So let's look at beta. We have a company that is operating with the name Meta currently. It is called what? Facebook. This company has been one of the most valuable companies in the tech space of social networks. It has been one of the most valuable, and the founder has also been what? One of the most admired young tech leaders, and that is who? Mark Zuckerberg. He is among the world's richest, top 4 world's richest men. So if you notice, Facebook, now Meta, is traded as a stock. Okay, it's traded as a stock, as an asset that people have interest in purchasing. So you see, I've used Alpha, okay, use Alphabet, which is Google, use Apple, which is what? A key stock, use Amazon, which is also one of the most healthy stocks, okay, or assets traded. Okay, now you can find a number of different assets that correspond with the letter A. and the next letter. Okay. So now we have the color of the apple. It is golden. It also represents another asset in the forex market, which is gold. Okay. And also in the crypto market, which is Bitcoin. So these assets are very valuable. So having done that, I said the next thing about the asset and why people are interested in the asset is not just because of the name of the asset. The name alone will not attract anybody. It is the value of the asset which is always rated